Trading crypto is a dream for scalpers. The daily volatility is so high that being a scalper, whilst very difficult, can reap huge rewards for them. When trading Bitcoin versus something like a boring FX pair, the volatility enables us to scalp easier. Hey guys, welcome back. In this video, we have two popular scalping strategies that traders will often use to take advantage of small intraday price movements. But before we get started, make sure to hit the subscribe and like button is greatly appreciated. Let's jump right into it. The first trading strategy, which is an EMA strategy. EMA stands for Exponential Moving Average. And right now, you can see I've got the Bitcoin chart against the US dollar. And right now, we have absolutely no indicators here whatsoever. Without EMA strategy, though, we want to use three different EMA, the 3, the 6, and the 9 period EMA together, because we're scalping this in a really short-term chart that we're using. So you can either use the 3-minute or the 5-minute chart. You can change these depending on your preference. But really what we want to do is look for a crossover of the 3 period EMA through the 6 or 9 period, without going too much into exponential moving averages, essentially the shorter time period. This will track the price more closely. And then the longer the time period that you're looking at, that will smooth out price movements. So essentially what we're doing here is looking for an indicator to tell us what the ultra short-term price is doing compared to the longer price. And then we can hopefully use that to anticipate a move before it happens, and then get in and place our trades. So then firstly on Binance right now, I'm going to change this to a 5-minute chart right here, so we can see exactly what's happening over 5 minutes. And then I'm going to choose 3 technical indicators types in EMA, and it should come up. You can see the moving average exponential. So click on that 3 times because I want to add these 3 EMA. Then we can go over to the format option and change it. This one is actually 9 periods already. You can see the length is 9. So we won't change that. You can change the style to suit you, changing the color and also the opacity. Do that for all of these. But important to know is that you can change the time scale just by going to Format, to going to Inputs, and then changing the length. So remember, it's a 3, 6, and a 9 period EMA. So what we want to do is look for the 3 period SMA, the shortest EMA. You can see that on the chart right here as yellow. We want this to cross through both the 6 and the 9, and that will tell us that the short-term price movement is possibly changing. You can see that right here. During this dip, what we can see is that the 3 period EMA is actually below the other 2, meaning that we're in a slight downtrend. And that is certainly happening. We want to wait for this movement right here. You can see the yellow line, the 3 period EMA moving up through both the 6 and 9. And that is telling us that that trend is reversing and that the short-term price movement is to the upside. We also get a massive bullish candle right here, which is a great entry trigger. But really it is the EMA that we're looking for. When it moves through to the upside, that is when we go long. So either on this green candlestick or on this red candlestick right here, we can enter a long position. When you enter a long position, you can obviously put that in at a certain price that you get. And then with your stop loss, you want to look for a certain set amount of stop loss. Remember, this is day trading and scalping right now, so we're not looking to be a hero. Maybe put the stop loss around 0.5%, something you're comfortable with. In this instance, you can actually see a level of support down here. And so I'm comfortable putting that stop loss at around 0.6 or 0.7 in terms of the take profit. Again, this is up to you. But a risk-reward ratio of about 1.5, 1.25, something like that would be a decent risk-reward for a very short-term trade. Of course, you can use this on the opposite side as well. You can see right here that the yellow line is actually above the other 2, but we're coming into some selling pressure with these red candles. You can initiate a trade when the crossover happens and then do exactly the same to the short side. So if you do want to short and you want to use futures to go ahead and short Bitcoin, you can do that with a stop loss around 0.6% and then take profit around 1.25, 1.5, or even 2 times more than that. This doesn't work out every time, but you can see that the yellow line, the very short EMA, really does work to tell us what the short-term trade is going to do. Potentially, if you're scalping, this is a great way to start and really understand how the market is moving short-term in comparison into the longer term. And to be honest, A 3-period EMA is really telling us what orders are coming into the market. We want to see that so we can trade off the back of it and enter those trades accordingly. The next scalping strategy to use coming up a little bit in difficulty is the Stochastic Oscillator once more. I'm not going to go too much in detail into what the stochastic does, but essentially it is a range indicator and it can show us momentum in the trade. Actually, the stochastic takes a lot of the guesswork out of it. So what we want to do with this strategy is to use the Stochastic Oscillator as an entry trigger. What you can do is go long when the ESO is at the bottom of its range and a bullish crossover occurs. That is taking a lot of the guesswork out of our trading for us just by using this indicator. When do we trade out when this Stochastic Oscillator is at the top of the range and a bearish crossover occurs? What it's essentially telling us is that, hey, this might be a good time to get in when it's at the bottom of its range. When it's at the top of its range, the move may be coming to an end, and so you may want to get out. It doesn't work every time, but it's a fairly simple indicator that we can use. And you can use both the 50 and 200 period moving averages as extra confirmation and some extra information that we need. For example, if the price is above the 50 period, it's telling us that the short-term trend is bullish. And so that may be good for us to go long and try and ride that trend. So back on the chart, I'm going to use a 5-minute chart once more. And you can see all of the indicators have been removed from your indicators right here, and then just type in stochastic. And we're going to choose to cast it right here. You can see it comes up at the bottom of the chart. Now I changed around all the styles to make it easier to see. You can do that to your preference. In terms of inputs, though, you can see the length 14, smooth K1, and smooth D3. You can leave these as normal. What we want to see right now is the yellow line right here. This is known as the key line. This is our signal line. And we want to watch this one. There is also a red line down here as well. And what we want to do is watch for the yellow line passing through the red line in a bullish fashion. What is British fashion? You can see right here, down at the bottom of the range around 25. This is considered the bearish portion. So we want to see the yellow line moving up in a British fashion up into the mid and higher range of this stochastic. We can trade when this happens then. So right here, the stochastic is giving us an indication right here, the yellow key line moving through the red line. And that is when we can go in as well. It just so happens that the move did occur. It moved up right now, and we would have made profit on this trade. As you can see, when do you get out though? Well, there are different ways of getting out. Firstly, we can use it exactly the same as the first trade that we did. So putting in an entry point, maybe an amount that you're capable of losing 0.7%, and then a couple of percent on the upside, having that good risk-reward ratio. Another way though, like I showed you right here, is to wait until the stochastic is at the top of its range, telling us that the move may be coming to an end. And you can see that on the chart, there are some bearish crossovers from the upper portion moving down into the lower portion. So that would be our time to get out around this level on the chart. That would be around here. So that would be the move getting in when we get that bullish crossover, and then coming out when we get that bearish crossover. You can see there are many times on the chart that it happens moving from bearish areas into bullish areas. It's a fairly simple strategy to follow. Moving with trends, it doesn't work every time. But using an indicator like this is a fairly simple way to go ahead and actually get some entry triggers and start trading. So hopefully you did enjoy today's video and found some value. Leave a comment about your thoughts on the trading strategies. Also, don't forget to subscribe and turn the notification bell on. Thanks for watching.